All right, coming up, we're going to do the chart of the day and also count it down to the close on this Monday. First up, though, let's get back to Charlie Pellet.
Meanwhile, back at Bloomberg World Headquarters in New York, I'm Charlie Pellet. Here's what's going on. We've got stocks trading mixed with the Dow lower, S&P, NASDAQ, they're both higher. 10-year yield, 1.57%. Do want to begin with natural gas. That's a big story today, looking at natural gas plunging 7.4%, 501 per million BTUs. Bitcoin on the move as well, up 2.8% right now, 61,072 on Bitcoin. Crude, West Texas Intermediate, higher by 19 cents. 82.47 a barrel on WTI, up by 0.2%. The equity market trading mixed. We've got 28 minutes to go until the close. S&P up 13 right now, up 0.3. The Dow on the minus side by 49 points, down 0.1, while NASDAQ up 115, up 0.8%. Stocks are extending a rebound as a whipsaw in energy prices relieves some pressure on the market. Influenza cases are 23% higher across the U.S. compared with a year ago, according to data collected by Walgreens Boots Alliance. The rise may be due to people spending more time together and a loosening of social distancing measures and mask wearing after vaccination. In the meantime, coronavirus cases in the U.S. do remain little changed, according to data collected by Johns Hopkins University and Bloomberg News. The daily death toll also remains little changed. Dr. Joshua Sharfstein is vice dean of the Johns Hopkins Bloomberg School of Public Health.
I mean, I'll feel like we're in a much better place when we're at under 100 a day, which is totally possible, I think, with vaccination and with, the little bit of passage of time here, but we really do have to, keep pushing forward.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer down 0.4%. Its German partner BioNTech up 4.5%. AstraZeneca down 1.7%. Moderna, its shares up 3.4%. J&J Johnson & Johnson down by 0.5%. So again, recapping, stocks are mixed. S&P up 12 now, up 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Yeah. I think, is it Beatles or is it? It is Beatles.
It is a Beatle.
Is it really? It is a.
Oh.
Is it George?
Yes, it is.
Harrison? Okay,
Absolutely.
George Harrison.
Solo, doing a song called Ding Dong, Ding Dong. Ring out the old, ring in the new. Seemed particularly appropriate based on today's chart.
All right, so maybe let's get to it. Tell us about that chart.
Sounds like a plan. Anyway, I was looking at a report the other day from the
Did you want to talk more about the song? Did I go too early?
I'm good.
Okay. All right.
Let's talk about the Research Investment Committee at Bank of America because, the other day they were making the case that, it's time for some more capital spending here in the U.S. And they figure maybe the fact that prices are going up the way they are, faster inflation, may serve as a catalyst in giving companies and presumably governments as well a reason to try and modernize. And one particular set of data that they cited is something that the Commerce Department puts out every year that refers to the average age of fixed assets and consumer durables. So for fixed assets, think about buildings, that sort of thing. Consumer durables, we're talking about, cars and appliances and so on. So, you're talking, machinery and equipment as part of the mix as well. And what's happened is for 20 years running, that average age has gone up. And in fact, we're at about 22 and a half years, 22.4 to be more precise, based on the latest data, which covered 2020. And just to put that in context, before we started seeing record after record the past few years, the high was 20.6 years back in 1940. We're about 9% above that peak now. So, you have people looking for change. Basically, that's, Bank of America's point. I actually had a email subscriber ask me, well, what industries does Bank of America think will benefit most? And let me give you some that they cite in this Research Investment Committee report. Banks, restaurants and delivery services, oil and gas, industrial companies, and hospitals of all things. In any case, if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So this whole idea that faster inflation may serve as a catalyst, is it just because of inflation, so let's put the money to work? And this is a valuable way of doing so? Like, what's the correlation there?
Well, if costs are going up, think of it from the corporate perspective especially. They're going to be looking for all kinds of ways to cut costs, and one is to get more efficient, more modern equipment, newer factories. So that would kind of cover that piece of the puzzle.
Good luck finding the people to do this actual construction and get them raw materials in order to do that construction. But that is a different conversation. Dave Wilson, give us your stock of the day.
One you might have heard of, Tim and Carol. Macy's. Yeah, it's the department store chain. The ticker M, one letter. Here's why. You got a couple of things going on here. Dow Jones reporting that Saks Fifth Avenue is looking at a $6 billion valuation for its e-commerce business when it goes public. And that's triple the value that they sold a stake for in March. That's one piece. The other piece is, the other day, the activist investor, Jana Partners, bought a stake in Macy's and came out and said they basically want that company to do the same thing as Saks, to separate its e-commerce business. So you put those two things together, you have a gain for Macy's of more than 17.5%, and a stock that's at its highest price since January 2019.
I find retail, we just talked about retail restructuring with Mo.
Yeah.
We're definitely seeing that transition. All right, Dave Wilson, thank you so much. Check out Dave's Stock of the Day. You can find that at 4:15 p.m. Wall Street time.
Well, let's get to check the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. Former Secretary of State Colin Powell is dead at the age of 84, the result of complications from COVID-19. Even though his family says he was fully vaccinated, he was, though, struggling with cancer. Powell was once asked how he'd like to be remembered.
Oh, a good public servant, somebody who truly believed in his country, loved it, and served it to the best of his ability.
Powell was also a former chairman of the Joint Chiefs of Staff under Presidents George Bush and Bill Clinton. He retired from the U.S. Army on September 30th of 1993 and is survived by his wife, Alma, and their 3 children. Defense Secretary Lloyd Austin says the nation has lost one of the greatest leaders we've ever witnessed.
And I lost a tremendous personal friend and mentor. He has been my mentor for a number of years. He always made time for me, and I could always go to him with tough issues. He always had great counsel.
Austin says he has a hole in his heart after hearing the news. Jury selection is underway in Georgia for what could be a challenging job of finding jurors for the trial of 3 white men charged with fatally shooting black jogger Ahmaud Arbery. Marcus Arbery is Ahmaud's father.
I know my son was lynched by a white mob.
Marcus Arbery says he'll be fine as long as justice is served. Prosecutors say Arbery was, quote, hunted down and ultimately executed when he was mistaken for a burglary suspect. The 3 defendants claim they acted in self-defense. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, live at the Milken Institute Global Conference on the West Coast. We'll get back to our guests in just a moment. Meantime, you put Dave Chappelle and you put Squid Game in a headline. You're going to read it.
You are. This one's by Lucas Shaw, and it turns out that Dave Chappelle's special cost more than Squid Game. So Lucas has been reporting on the growing unrest at Netflix over Dave Chappelle's new special, The Closer, and as a result obtained internal Netflix data that offered the clearest picture yet of how the service measures the success of its project. Remember, Netflix doesn't have ratings.
Right, correct.
They have so much data, though, when people watch, what people are watching, to decide what to invest in from a content perspective.
Right. Think about the metrics that when you were in traditional linear television, broadcast networks, right?
Nielsen home.
Exactly.
Right.
And then that's what determined how much an ad cost during certain different times on a network. But this is, you're right. Like, they know when people are watching. They know when you, Tim Stenovec, are watching Squid Game, and when you're doing it, or what else. Then, if you watch that, what else do you watch off of it? I mean, if you think about it, what's interesting at Milken, so many of the conversations are about data. There's tons of data out there, and a lot of people talk about a data dump. It's not smart data. So, but you think about probably what Netflix is, it's probably very specific, and some might say that's smart data.
Well, let's talk numbers here. So Chappelle's specials are among the most watched on the service, because remember, we're talking Dave Chappelle and Squid Game. They're also the most expensive. 24 million people watched a previous special that was Sticks and Stones that cost the service $23.6 million. That's according to the documents. The Closer, the most recent one, cost $24.1 million.
Which is fascinating, right? In terms of, all right, so you think about it. It's a business when it comes down to it, right? And they're all about content creation. But if they take a look at what something costs, how much people are watching, like, they can determine, what is it that keeps people going back to Netflix, staying with Netflix, because the one thing Netflix doesn't want is churn.
Exactly. And we're going to find out churn tomorrow. Well, not necessarily churn. We're going to find out numbers tomorrow from Netflix when they report earnings after the bell.
All right, this is Business Week, and this is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. The Dow remains lower. S&P, NASDAQ, they are both trading at or near session highs right now. We have got stocks extending a rebound from last week as a whipsaw in energy prices relieves some pressure on the market. Crude oil, West Texas Intermediate, is trading higher by 0.2%, $82.43 a barrel, but natural gas selling off down 7.7%. Natural gas $4.99 per million BTUs. Bitcoin up 3.2%, 61,311 on Bitcoin. 10-year yield 1.58%. The Dow down 60, down 0.2. S&P up 11, up by 0.3%. NASDAQ up 112, up by 0.8%. American Express will allow employees to work from wherever they want at least 4 weeks a year as part of the company's push to offer greater flexibility even as the pandemic subsides. American Express shares, they're up by 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
11 minutes left in the trading session. You are listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, live on the West Coast at the Milken Institute Global Conference. Let's get to the drive to the close. Our guest, Aaron Kennan, back with us, CEO at Clear Harbor Asset Management, back with us on the phone in Stamford, Connecticut. Hey, Aaron, nice to be talking with you again. I got to ask you, though, because I always remember early on that you were among the first to close your New York offices, set up in Connecticut during the pandemic and say, this is the way we're going to work going forward and you're going to have flexibility. Are you still doing that?
We are. Thanks for having me back, Carol. We are. We have our headquarters now in Stamford, and I'm looking at the Long Island Sound as I speak with you this afternoon. We do miss New York and the hustle and bustle and the connectivity that it brings, but we're only a short Metro North ride away, and so we feel like we sort of have the best of both worlds at the moment.
And we're going to get into the financial markets, but I am curious what your take is as you watch American Express say, okay, workers, you can now have 4 weeks, flexible work. Do you think ultimately the financial sector more broadly will have to be more flexible despite what you might hear from the Jamie Dimons of this world?
I think it depends. We communicate with our clients frequently. We visit our clients. They visit us. We attend conferences. We have a very flexible work environment here at Clear Harbor Asset Management. But, if you're a bond trader at Citigroup or, one of the large investment banks, it's difficult to do that from home. And I think it really will vary depending on the sort of segment within finance that you're referring to.
Well, Aaron, as Carol mentioned, we are live at the Milken Institute Global Conference 2021, and among the many interesting conversations we've had today includes one with David Hunt, the CEO at PGIM, who talked to us about what he believes truly is the transitory nature of inflation, arguing that we will see technological progress and demographic changes that bring down inflation. I'm wondering if you agree that inflation is transitory.
Well, that's a great point in question. I tend to embrace that view, and I know some in the more entrenched inflationary camp want people like the fellow you referenced at PGIM and perhaps myself to wave the white flag of surrender. But I think it's hard to discount the reality that we're still experiencing significant supply chain bottlenecks that are almost wholeheartedly a function of COVID and the global decision, really, to close down an economy and then just sort of reopen it. And while it's certainly more of a prolonged trend and phenomenon, to sort of suggest that this is sort of cost-push inflation akin to what we saw during the 1970s, where we saw major wage spikes and really very little productivity gains. We're not in that environment right now. We are seeing some wage inflation across certain segments of the economy, but we're also seeing rather significant unemployment among that same segment that just hasn't come back yet. Over 5 million people without jobs today that had jobs just prior to COVID. And I'd also argue that productivity is significantly higher today than it was during the 1970s. And so the sort of unit labor cost that was such an issue on the entrenched inflationary front in the 1970s, we're just not seeing that right now.
So the 70s is actually a good reference because it does give us an idea of what caused that scenario, that stagflation or stagflationary scenario. And it is very different this time around, safe to say. One thing I do wonder, Aaron, and going back to David Hunt and just thinking about the Fed and its metrics, that the labor market, people are retiring. There may be people who just don't come back to work, so that maybe we need to rethink how we measure labor force participation. Maybe it's not going to be what it was pre-pandemic, and we need to maybe think about it differently going forward.
Yeah, I think time will tell on that, Carol, for sure. There are lots of questions that we all have around this issue. But at the end of the day, I'm encouraged by the productivity gains that we seem to both anecdotally and statistically be gleaning and seeing throughout this COVID period that give me hope that, and I think justifiable hope, that some of the inflationary pressures are not only going to subside, but even some of the wage pressures are going to subside going forward as we see higher productivity, at sort of over 2% on an annualized basis.
What is it that you think will help with those wage pressures? And that's something we're going to certainly be listening for as we do get into the midst of earnings season. We've got a handful of earnings this week, including Netflix and Tesla. But what is it that you think about wage growth that won't get so hot?
Well, I think at the end of the day, there's still significant concerns. Sitting here in the Northeast in Stamford, Connecticut, sometimes you don't feel it, but I think we need to be sensitive to some of the concerns that are out there about return to work, about return to school, about, both parents, sort of feeling comfortable working full time while their children, are sort of wading through COVID with masks on in school. So I think there's that element, but there's also, it's just earlier in September that the unemployment bonuses came to an end, and so we're only in October, a month later, and I suspect that some of those people that were benefiting from those unemployment bonuses are still sort of determining where they go next and how they return to the fore. But keep in mind, a lot of this wage inflation is happening in specific segments of the economy, like hospitality and restaurants. And I'm sure you're both seeing it both out there and back home in New Jersey and New York. I'm certainly seeing it. But it's not evident across the overall economy. And I think it's important to sort of highlight that. We read headlines even on the Bloomberg terminal that, that wages are jumping everywhere, but they're just not. The statistics suggest otherwise.
Yeah, and safe to say that there's a fair amount of turnover, so maybe the wage inflation, depending on where the economy kind of settles itself, that maybe it will be so problematic. Hey, just quickly, Aaron, just got about 40 seconds here. So investment strategy, what are you advising your clients?
Oh, boy. Well, every client of ours at Clear Harbor is different. They have different goals. They have different sort of risk tolerance. We have non-for-profit clients. We have families. And, staying the course on, putting together a risk-adjusted sort of asset allocation strategy is what we're telling our clients right now. We're going through a period of great uncertainty as it pertains to the directionality of inflation and growth, and we don't think making significant changes in the midst of this moment is a great idea.
Yeah, there's lots of volatility out there, too. Aaron Kennan, co-founder and chief executive officer at Clear Harbor Asset Management. Thank you so much.
It's 3:56 on Wall Street.
The following is an editorial from Bloomberg Opinion.
In the interests of curbing tax evasion and crime, the U.S. has long pressed the rest of the world to crack down on financial secrecy. The Foreign Account Tax Compliance Act, adopted in 2010, requires other countries to report the accounts of American taxpayers or be excluded from the U.S. financial system. Despite the costs, other governments complied. Indeed, many went further, with more than 100 signing on to the Common Reporting Standard, which is tougher. Yet the U.S. didn't reciprocate. It hasn't joined the Common Reporting Standard, and the Treasury Department lacks the authority to collect information on foreigners' balances in U.S. bank accounts. Lawmakers should empower Treasury to ensure that dirty money has nowhere to hide. It's not too much to ask the U.S. to provide the same level of transparency that it demands of everybody else. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion. Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the closing bell. Live from Beverly Hills in Los Angeles, California here. Joined now by Carol Massar and Tim Stenavec, who I'm told also out here in Beverly Hills, though I can't actually see them. They're somewhere, I don't know, sequestered in another room. Anyway, this brings together our Bloomberg television, radio, and YouTube audiences. Carol, how you doing?
Yes. We're doing great. What a great event, too, and how wild. I mean, I know I got on a plane for the first time to come out west here, but this is for a lot of the folks at Milken right now. This is the first in-person conference that they've gone to, so it really speaks to you guys when it comes to the economy definitely reopening.
Yeah, that's certainly what we've been hearing from our guests over and over again when we've been speaking to them live in person here is how much they miss the idea of actually physically, Taylor, being somewhere at a conference. Yes, you can do a lot of this over Zoom. You can do some of it over Zoom and virtually, but there's nothing like actually running into people and having those spontaneous conversations.
Yeah, like you said, that's the case of why we're just trying to keep you here in our office as well. Those spontaneous conversations, Tim. It's so fun. Of course, you guys are all out there, but Caroline, we have to get back to these markets as well because we closed actually near the highs of the session, but it was a big tech kind of day. It's Apple. They had an event launching some new products. It was Tesla, right? So it sort of felt like that defensive big tech kind of move day.
And certainly when you looked at early hours trading, when I was landing into LA, there was worries in Asia, inflation, the top concern we're looking in New Zealand, China, the data coming weaker than expected. But it's interesting, the S&P 500 manages to grind higher throughout that.
Yeah, and there you are, the live shots in New York, coast to coast here. The clapping, the bell ringing here, counting you down to the closing bell. Looks like it's going to be a down day for the Dow Jones Industrial Average, 3276 and change right now, down about 0.1%. The S&P 500 is going to finish the day in the green, up about 0.3% or 15 points. The NASDAQ composite, that's your outperformer. Some of those big cap tech names really providing a nice little boost here, up about 0.8%, 124 points here. And let's take a look here at the Russell 2000 because, of course, a lot of talk here about those cyclical trades, whether people are willing to re-embrace those trades. And we'll see what those trades look like in just a second. Up about 0.1% here, 2267, up about 2 points right now, Carol.
Yeah, it was interesting when you break down the trade. I mentioned about, for some people, this was the first event that they've done in person, this Milken event, the economy reopening. And we did see that play out in the trade today. Consumer discretionary was up, information technology, communication services. So it does seem that there's some enthusiasm out there, certainly in the trade, even though we saw yields go up, but we did see energy prices move back a little bit, and maybe that provided a little bit of relief when it comes to inflation, guys.
Yeah, you saw a little bit of that relief within the equity markets. For the radio audience, as we do at this time, we're taking a look at the sector winners, the sector losers. Note that there are two sectors in the green, even in the loser section. So you're getting a little bit more broad-based, at least from a sector level. Let's start with some of the winners. It's auto components up 2.2%. A lot of this is Tesla really helping to fuel big tech higher. The retail index and food and staples, Albertsons was also one of those that said, what cost inflation? We're managing margins really well and taking market share. So that is certainly a sector that is up about 1.2%. We migrate quickly down to the bottom as we always do, and it's utilities, it's household products. So a little of the defensives that were on the losing side today, you're off about 1 to 1.3%. But Carol, you really mentioned it when you talked about yields. Oh my goodness. When we woke up overnight, it was what, New Zealand, Australia, up 16 basis points on the 10-year in one session. That triggered a little bit of that here in the U.S. earlier, but then it didn't. You've yields up maybe about 2-3 basis points on the short end. How much of this was a pull forward of some of those rate hike expectations if inflation is proving to be a problem? And then, of course, you saw yields fall on the long end with the 30-year yield down to a 203. You're down about a basis point or so of maybe slower growth, maybe lower inflation longer out if we're not going to tolerate it as much. So it's really interesting. You guys, of course, are down there at Milken on the ground. How much of this inflation and supply chain is filtering in through your conversations?
Well, it's definitely filtering into a lot of conversations. We talked with Barbara Humpton over at Siemens US, and they are definitely dealing with supply chain issues, especially when it comes to semiconductor issues. But I want to mention, because you talked about inflation, and that came up, our colleague Scarlet Food hosted a panel here. David Hunt over at PGen was on there, president and CEO, and he said, Scarlet surveyed the audience, massive crowd, and said, okay, everybody, how many think that there's transitory inflation out there? Nobody in the crowd raised hands. Then she turned to her panel of investment experts, David Hunt among them, how many think that there's transitory? And several of them on the panel raised their hands. So it speaks to a story on the terminal
Hunt,
about
course,
Fed researchers saying, listen, folks, it's transitory. What?
Yeah, sorry about the talking over you there, Carol. But yeah, David Hunt, obviously one of the big guests here. Hey, we're going to make do here with the tech issues here. Tim, you just stand there and look pretty. But we also heard from Dan Barkley over at BMO Capital, who actually talked about the same thing. And he talked about this idea here that when clients talk to him, yes, they all want to know about inflation. They're always worried about inflation. And I guess, look, if you got a big portfolio, you're of course going to be worried about inflation. But it's really more now about how do you guide these clients in a way where they sort of prepare for a future where maybe we get to a more normalized state of things.
And Tim, what's interesting is also Momoji we're speaking to at M3 Partners, who feels that, well, at the moment, there is no opportunity for investing in distress, because as we talk about the Federal Reserve pulling back a little bit on stimulus, that's not right here, that's not right now. The zombies continue, and instead he's looking to the SPAC opportunities. It still feels as though everyone's very cautious, troubled about the inflation story, about the growth story, but right now you still have to be investing in where the risk is.
Yeah, I found that really fascinating about what Mo told us as well. And in fact, he's not new to SPACs. I mean, SPACs really increased in popularity in 2020, but they're not anything new. Mo telling us that his first SPAC was back in 2016, and it's still doing pretty well.
Yeah, it is pretty fascinating to see him in terms of the SPACs that he's been in it for a couple of years. He does say that it was a pretty quick cycle in terms of what we've seen. And again, he sees it kind of evolving to where investors are going to be really looking at what the SPAC is investing into, and really understanding the fundamentals of a company and a business rather than just throwing money at maybe misunderstood opportunities.
And while you guys, of course, are speaking to all of those big shots down on the ground, I'm here in New York reading a lot of these analyst research notes that are coming out. An interesting one struck me, Romaine, JP Morgan, saying, don't fight that cyclical trade. It starts to get back into some of those economically sensitive trades that are going to do well, even though B of A comes out and says, valuations do look a little extreme at these levels, but how do you fight that trade of asset allocators moving into equities if that indeed is the real inflation hedge?
But here's the thing, like everyone we're talking to on the ground here, yes, they bring up a lot of worries about inflation, they bring up a lot of worries about valuation, but at the end of the day, it's a pretty optimistic tone here with regard, at least with regards to capital markets and the folks invested in that. And we know there's obviously a little bit of a disparity between what's going on with capital markets and maybe what's going on the proverbial Main Street. But for the folks here and what they're invested in, for the folks here and what they're watching, overall, it's a relatively positive sentiment.
Particularly when you did get the data coming in lackluster from China, for example. Everyone, stop breaking the wall, Romaine. But for our radio audience, Romaine's trying to get into my box that they see. You're ruining the illusion, the professional illusion that our team put on here. But they are worried that, you know, we were all talking about Evergrande, we were all talking about China, we were all talking about the risks therein. The data today didn't knock the S&P 500 from marching higher, really.
Hey, look, you know, you talk optimism, and I think about our interview that we had with Steve Case, the co-founder of AOL, who's been working in venture capital for years at this point. And he said he's really optimistic about, and he's been focused on this for years, guys, the rise of the rest fund. This is the area of the country that is not New York, that is not San Francisco. And he says what he saw and sees past past the pandemic is more and more people moving to these other areas of the country, and he sees a real opportunity to deploy capital and focus on startups in those areas.
Yeah, and that's what's interesting is some of the bigger themes that are being discussed here at Milken, whether it's people relocating around the country and developing cities that maybe were lost for a long time. I think about a panel I hosted on aging and thinking about the technology that's coming down, may take 5-10 years, but nonetheless, these are the things our investors care about, right? Our audience, about what's to come, what will be the companies and ideas that will really be propelling momentum going forward, guys.
I think we have about a minute left. Romaine, push us forward. We're at Milken day 1. I think there are still 2 more days to go as well. And then I know for the TV audience, we're going to be pushing forward to a supply chain show on Thursday and Friday as well.
Yeah, I mean, we're going to have a lot of great guests later today, next week. I mean, a lot of great guests. Tomorrow, O'Carroll's, believe, going to sit down with Kathy Wood. I'm going to sit down with Howard Marks, Steve Mnuchin. We're going to be out at the Long Beach port in a couple days here, and at the new LA Museum here. Look, we're making the most of this. We're the hardest working people, coast to coast, New York to LA, and back, hopefully.
I actually think I saw Romaine on Rodeo Drive. I'm just going to say, big glasses, he wouldn't talk to me. You know, he was just too cool. All right, guys, we got to run. Busy day. That's going to do it for Beyond the Close. Live from Milken on the West Coast. We'll see you again, same time, same place. We'll be at Milken tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So you are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. We are live at the Milken Institute Global Conference on the West Coast. We've got a few more guests, really great guests from this event coming up.
Yeah, what a day to wrap up. What a way to wrap up the first day of the event.
So only Monday.
First official day. You got invited to some parties last night, though.
I did.
Yeah. Guess who didn't?
Oh, sorry.
I know.
Oh, well.
All right, well,
I'll take it next time.
That's okay. Yeah, next year.
All right, coming up, we've got the co-founder and CEO of eToro, so looking forward to that. In the meantime, let's get to Nancy Lyons. She's in our D.C. bureau with a check on world and national news. Hey, Nance.
Hey, Carol. Well, the nation is mourning the loss of one of its beloved diplomatic and military leaders. Former Secretary of State and Joint Chiefs Chairman Colin Powell has died at the age of 84 from COVID-19 complications. He was fully vaccinated, but had been struggling with a form of cancer that had weakened his immune system. Defense Secretary Lloyd Austin says he has a hole in his heart upon hearing the news.
The world lost one of the greatest leaders that we have ever witnessed. Alma lost a great husband, and the family lost a tremendous father.
Austin says Powell for years has served as his mentor and always had the time to take his questions. The Justice Department is asking the U.S. Supreme Court to lift Texas's ban on abortion after the 6th week of pregnancy, setting up a new high court showdown over what is easily the most restrictive abortion ban currently in force in the country. In papers filed today, the department asked the court to intervene on an emergency basis to block the law on grounds that it violates precedents protecting abortion rights. White House Press Secretary Jen Psaki says President Biden has spoken with Senators Joe Manchin and Kyrsten Sinema about their concerns with the president's Build Back Better agenda. And she says tomorrow the president will be meeting with other lawmakers.
He will host 2 different meetings with House members here at the White House, one with moderates and one with progressive members.
Psaki says the administration is looking at a range of good ideas and proposals on clean power. That issue is one of the sticking points in President Biden's proposal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy Lyons, thank you so much. Carol Masser, Tim Stenovic. We are live at the Milken Institute Global Conference. Special guest that we've got with us, Yoni Assia. He is co-founder, CEO of eToro. We're going to talk for a couple of minutes, and then we're going to bring you back and talk some more. What's your world been like? I mean, under the pandemic, the retail investor just took off.
Well, we've definitely seen an inflection point of the rise of retail investors all around the world starting in March 2020.
Did you see it right away?
We saw it right away as institutional investors got scared and basically got out of the markets. The markets tanked back in March. And what we saw is quite interesting. We saw retail investors save the day. They just came in, flocking into the markets and buying stocks and discounts. And that started what we eventually saw as the inflection point, bringing up what we saw this year with GameStop and AMC, retail investors realizing they have a voice in the markets and that they're impacting what's happening in the markets in a bigger way than ever before.
Was it stocks at a discount, or was it everyone at home stuck inside and they can't do anything else and they can't go out to restaurants and they can't go to sports?
And just got about 40 seconds.
I think it's both. I think a lot of people got aware of capital markets for the first time because they had more time at home, more time in front of the screen. But I think what's happening now is with zero interest rates, governments printing a lot of money, everybody's talking about inflation, purchasing power. People are looking to do with their money something. They want their money to work for them. And it's a very big social dialogue happening all around the world globally.
And increasingly, they don't want to do it with the establishment, just quickly.
They want to make their own decisions. People want to learn. They want to educate themselves about what's happening in the markets. In eToro social network, they can see what other people are doing in their performance. So they want to educate and make their own decisions.
All right, sit tight for a second, Yoni, and we're going to come back and talk some more. We're going to continue with Yoni Asiya. He is co-founder, CEO of eToro. You are listening to Bloomberg Business Week. You are watching us on YouTube. There we are. Carol Massar, Tim Stanovic. Hey, everybody. We're live at Milken. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The S&P pushes higher, up 15 points today, up 0.3%. Stocks extended a rebound as a whipsaw in energy prices relieved some pressure on the market. S&P up 0.3%. The Nasdaq 100 index gained 1% in a continuation of last week's gains when solid corporate earnings and economic reports were enough to outweigh concerns about energy shortages and supply chain disruptions. Nasdaq was up 124 points today, up 0.8%. The Dow, though, losing day, down 36 points, down 0.1%. 10-year down 4/32, 10-year yield 1.58%. Spot gold down 0.2%, 17.64 the ounce. West Texas Intermediate crude, little change, up 2 cents, 82.30 a barrel on WTI. Natural gas, though, plunged 8.2%, 496 per million BTUs. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Tim Stenivek and Carol Massar live from the Milken Global Institute Conference. Did I get that right, Carol?
Milken Institute Global Conference.
This is why I have you
we
around
work.
here, right?
I know.
Okay.
I know.
Well, it is
it's the
time
one
now.
reason.
It is time now for our weekly crypto update. It's brought to you by Interactive Brokers. Trade crypto for less coin with commissions just 12 to 18 basis points and no hidden spreads or markups. Learn more at ibkr.com/crypto.
We're going to talk a little crypto with our next guest. Late last month, though, you might have noticed that eToro, the digital stockbroker, delaying its $10.4 billion SPAC listing. We'll get into that. For an update on the business here at Milken, let's bring in Yoni Asia. Did I say it right? I'm trying to. Co-founder and CEO of eToro. The company pointing out it is the world's largest trading network right here at Milken, normally based in Israel, but doing a little bit of traveling now that the world is opening up. How are you?
Very good, very good. Excited to be in LA first in 25 years.
Really?
Yeah. I used to spend here a lot as a kid.
Wow.
But I haven't been here for a while.
A lot of things have changed. A little bit?
Well, I'm just here at the hotel all the time, so I don't know.
Same with me.
So let's talk about eToro and what's been going on. We're going to get into your listing. But in the meantime, talk about the business and the growth. What are you seeing?
Well, we've seen explosive growth over the past 18 months, really starting, as we talked about before, with the beginning of the pandemic, just at the inflection point in the rise of retail investors with a whole new generation across the world, millennials realizing that they want to invest in the markets, whether it's stock markets, whether it's U.S. stock markets, or whether it's crypto markets, just increased interest all around the world. We founded the company in 2007 with a vision of opening the global markets for everyone to trade and invest in a simple and transparent way. And up until beginning of 2020, we had about 12 million registered users. And since then, we added more than 11 new million registered users by the end of the first half 2021. So basically, we doubled the company, more than doubled the company.
So 23 million? How many?
So 23 million registered users worldwide. Grew by 5.6 million registered users the first 6 months this year, after growing about 5 million registered users the entire of last year. We've grown significantly our business, and we've seen the shift from the first crypto rally in 2017. We've seen our business grow rapidly from $60 million commission to $390 million from 2016 to 2018, really driven by the first crypto rally.
Yeah.
And then we saw crypto winter, and in crypto winter, we sort of drove our customers who came to eToro to trade back then, XRP, Ethereum, to diversify into equities through the social network where they can actually see what other people are trading and see each other's performance and copy the most successful investors. And then we saw crypto winter shifted the business into equities and commission-free stock trading worldwide, and then started this year with Crypto Rally 2.0, which is just an amazing rally.
Yoni, I hear what you're saying, and I imagine some of our listeners are thinking to themselves, wait a second, this is a similar story as to what propelled Robinhood to the public markets in a relatively short time into such massive growth in the year 2020 and 2021. But we are seeing that Robinhood shares are down more than 40%. partly due to some softness, what the company referred to as seasonality earlier this year. Are you seeing any of that decline in activity, any of that seasonality that we heard from Robinhood?
So sensitive to the fact that we're in the process of transforming from a private company to a public company, I can only share companies' data relevant for the first 6 months, which we published, which were very good. We did update the markets that Q3, and this is something you can look at exchange data. So equities have been softer in Q3. If you look just at exchange data, options data, volumes in equities and volatility.
It was a tough September.
Have gone down generally in the markets. And now we're seeing, obviously, crypto rally 2.0, the longest crypto rally in crypto history, in Q4, sort of returning with a roar. So hoping to see Bitcoin reach all-time high, already peaked and touched actually market cap all-time high over the last 48 hours. So very interesting to see what's happening in crypto in Q4.
Yoni, who are you competing against? Is it Robinhood? Is it all of the online trading platforms, even the establishment? Who is it?
So the way we see it, and again, we're very global, and we have our businesses Europe, U.S., Asia, Latin America, Middle East. We're regulated across the world, and in every single country, what we see is the discount brokerage 1.0 was very much consolidated by the local banks. So here, Schwab bought TD, Morgan Stanley bought E-Trade, and we see the same in Germany, in Italy, in Spain, in the UK, everywhere. But who we're really competing against is those super apps, right? Apps like eToro, who are attractive to a new audience, new customers that are beginning their trading activity, are looking for new tools, for ways to engage and learn how to trade the markets, how to participate in the markets. And there's a lot of great companies just expanding the audience and expanding the markets.
Hey, Yoni, you mentioned that you're in the process of transitioning from a private company to a public company. Is it still going to happen in the fourth quarter?
We are currently expecting the de-SPAC process in Q4, and very excited about this transition at a $10.4 billion valuation.
Still with Betsy Cohen's SPAC fintech acquisition?
Yes.
FTCV?
FTCV.
It's going to happen?
It's going to happen in Q4, currently in progress.
Nothing could derail it?
I come from capital markets. There's always probabilities of something happening somewhere, sometime, but Bitcoin is also here to stay.
One last question, 20 seconds here. Is it a younger demo that definitely is using the platform? Is that who it is, or is it?
It's younger demo versus the incumbents for sure. The median age in eToro is 34 versus 60 plus in some of the incumbents.
Stay in touch. We want to talk with you, especially when you go through your going public in the fourth quarter. Yoni, thank you so much.
Thank you very much.
Yoni Assia, he is co-founder, CEO of eToro, joining us here at the Milken Institute Global Conference. Fascinating, right, in terms of the growth?
Really fascinating. Yoni, you got to come visit us in New York, too.
Yes.
All right.
Done November,
he says.
We're going to hold you to it. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg.
Thank you very much.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
That was interesting.
That was really interesting.
You know, we talk so much about Robinhood, but it's interesting to see what he's up to. It's global, the growth that he's seeing, and we'll see even more if indeed he goes public via that SPAC come the fourth quarter, right? We'll get a wider peek into the financials and the metrics.
Yeah. Also, just candid, very candid.
Yes.
Normally, a company CEO at this point would be concerned.
Yeah, exactly.
Yeah.
We're going to talk about more in just a moment. First up, though, back to Charlie Pellet.
Thank you very much. And here's what's going on. The Dow lower today. The S&P, NASDAQ both higher. Stocks extending a rebound as a whipsaw in energy prices relieves some pressure on the markets. S&P up 15, a gain of 0.3% today. NASDAQ up 124, up 0.8%. The NASDAQ 100 index up by 1%. Dow Industrials down 36 for the Dow. That was a drop of 0.1%. 10-year down 5/30 seconds. 10-year yield 1.58%. Bitcoin rallied 3.4% today to 61,397. Gold down 0.2%, 17.64 the ounce. Crude higher, little changed, up 6 cents, 82.34 a barrel. The big news, though, natural gas plunging 7.8%. Nat gas now at $4.98 per million BTUs. A big area of concern for investors has been the inflation outlook and whether it is transitory. Aaron Kennan is CEO at Clear Harbor Asset Management. He was our guest right here on Bloomberg Business Week.
At the end of the day, I'm encouraged by the productivity gains that we seem to both anecdotally and statistically be gleaning and seeing throughout this COVID period that give me hope that, and I think justifiable hope, that some of the inflationary pressures are not only going to subside, but even some of the wage pressures are going to subside going forward as we see higher productivity, at sort of over 2% on an annualized basis.
Amazon.com plans to hire 150,000 seasonal staffers, about 50% more than last year, as the company extends or seeks a cushion of workers to help it meet demand during the holiday shopping period. Amazon shares up today by 1.1%. So recapping, S&P 500 index up 15 today, a gain of 0.3%. 10-year yield right now 1.59%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet, Tim Stenavec, and Carol Masser, live in Beverly Hills. Well, earlier today, we spoke with Bridgewater Associates Sustainability co-CIO Karen Carniel-Tambor at the Milken Global Conference. In this excerpt, Karen told us all about how investors are increasingly more interested in having portfolios aligned with ESG. Check it out.
The revolution that I feel like has occurred is that a few years ago, a very, very small subset of investors really wanted to talk about this issue.
Yeah.
And now, predominant number of investors say, I care about this issue, my stakeholders care about this issue, I want my capital aligned. Now, what does it mean? How do you measure it? How do you actually do it at a whole portfolio level? That's evolving very quickly, from very nascent to developing very quickly. And one of the biggest shifts you're seeing is, people went from kind of not caring about it to let's do it with like a tiny part of my portfolio. I'll have a couple really awesome projects to write about in my annual report.
Right.
To wait a minute, if this actually matters, it matters at a whole portfolio level. I need to see it top down across all the asset classes, think about my strategic asset allocation.
How do you think about measuring it?
So we are a systematic fund. We do everything systematically. So when I started approaching this issue with my team, we were sort of saying, we have to find a way to systematically measure it. And I think the systemization matters even more here than in other issues because you have so much personal opinions. You don't want to rely on, someone in the morning saying, I think this company's good, I think it's bad. So we basically try to build a process that goes through thousands of securities around the world and assesses their alignment to the United Nations SDGs.
What is the connection that you found between that measure and returns?
I think the most valuable way for investors to think about it is that there's sort of 2 dimensions or even 3 dimensions you want to think about investing. There's the part that's just about returns, where all you need to do is look at what's happening in the world right now with the energy crisis, with what's happening in fiscal policy, to say, clearly, if my job as an investor is to imagine what's going to happen in the world relative to what's priced in, I can't ignore these issues. It's obviously causing big changes in assets and so on and so forth, and going to drive our broad outlook. There's the risk side, which is, typical risk controls are not well configured to think about what if we have a bad climate outcome or a fast climate transition. But then you have this third dimension, which is just impact, saying, yeah, I could maybe find ways to make money that are unaligned with this, but I actually want my money aligned with this beyond just thinking about returns. I want to be contributing to these issues.
Karen, Tim and I talk all this time that, here we are going through quarterly earnings and, we're looking at margins, top, bottom line, all these different metrics. Like, we get this, right? And investors get this. Shouldn't there be some kind of ESG metric? How do we find a way to let the companies make that transition that might have a financial impact? Does the SEC need to come up with some metrics that says every quarter we want to know revenues, we want to know earnings, but we also want to know that ESG metric, and that's going to matter?
Well, I think ESG is a really broad universe.
It is.
On every environmental or social issue this is going to develop, but let me take the one that's furthest along, which is carbon. Because you have this world where basically every government in the world has said, I want to find a way to transition my economy to have net zero emissions. And now there's a very clear path of, for every company, you can actually say, well, what are they responsible for? What are their emissions? And if you take seriously that governments through time will find a way to transition and put the policies in place, whether it's incentives or taxes or whatnot, companies that don't do it are going to have a problem. And so with carbon, I think we have the clearest path of this is literally what needs to be measured. I think most companies know they're going to be forced to report their carbon footprint. They're going to be forced to report it in different ways. There's a couple different templates that have been created out there of what that reporting is like. And it's giving investors a very clear roadmap between kind of government commitments, this is what we want the economy to do, to specific company reports of whether or not they're aligned with that.
What's the penalty then, ultimately?
Well, just look at the amount of capital all around the world that's shifting. Investors are pretty clearly saying that they want to be aligned with putting their capital towards where we'll be aligned with a net zero transition. How many people have made a commitment saying, I want my portfolio to be net zero?
But they'll give up some performance because of that?
Well, if you're a large institution and you have a multi-decade commitment to being aligned with net zero, that's a binding constraint. You don't really have any choice. You've got to go meet that commitment.
All right, and that was Karen Carneal-Tambor. She is the co-CIO for sustainability over at Bridgewater Associates. We caught up with her here at the Milken Institute Global Conference. Keep in mind, folks, we know this, you know this. We talk about it. Sustainable investment. It is growing assets, in fact, up to $35.3 trillion globally last year amid mounting concerns about societal inequities and climate change. We're seeing, Tim, so much money go into this area.
We see a lot of money going into it, but I go back to the question that you and I ask over and over again about metrics and about, what moves Netflix's stock tomorrow. Is it Netflix's comments about ESG? No, it's Netflix's comments about subscribers in the most recent quarter and how they're thinking about this current quarter.
And I got what you said about, being carbon neutral, right? Or net neutral in terms of what governments are requiring companies to do. But I do feel like that I wonder if the metrics need to be amped up a little bit.
And what do those metrics look like?
Yeah, exactly.
Because there is standardization of them.
Exactly. But it's definitely an investment area. As she said, people are talking about it and dealing with it a lot more than they ever were. All right, you're listening to Bloomberg Business Week, watching us on YouTube, and this is Bloomberg Radio.
Let's get a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Hey, Tim. Colin Powell, who was born in Harlem to Jamaican immigrants and rose to become the first African-American to be U.S. Secretary of State and chairman of the Joint Chiefs of Staff, well, he has died. He was 84. His family says he died due to complications from COVID-19, even though he was fully vaccinated. He was, however, dealing with a form of cancer that had weakened his immune system. White House Press Secretary Jen Psaki says it's a great loss.
This is obviously a heartbreaking tragedy for the country and one the president is feeling personally.
Deaths from COVID-19 breakthrough infections are exceptionally rare. Out of the more than 187 million people who'd been fully vaccinated in the U.S. as of October 12th, only about 7,000 had died from a breakthrough infection. That's according to the CDC. And of that group, 85% were over the age of 65. Output at U.S. factories fell 0.7% in September, according to the Federal Reserve, largely because of supply chain and material shortages.
Consumers have money to spend, but the shortages and resulting price pressures could well impact holiday shopping. Dana Peterson, chief economist of the Conference Board, said in a Bloomberg interview.
There's very strong demand for buying things and also rising demand for services. Indeed, many people will be traveling. You're having issues producing amid the Delta variant. Transportation costs and also labor costs have risen. Prices have risen pretty aggressively. That may put off some consumers from buying.
Peterson still forecasts strong economic growth for the rest of this year and above-trend growth for next year. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. This was a tough day for Zillow.
Yeah, it certainly was. The company's taking a break, it said, from buying U.S. homes after the online real estate giants pivot into tech-powered house flipping hit a snag. So remember, we've talked about this a lot, the idea of these iBuyers. That's I with a lowercase I, big B, iBuyers, which Zillow is one, Opendoor is another. It acquired more than 3,800 homes, Zillow is, in the second quarter. It's going to stop pursuing new purchases for the remainder of the year as it works through a backlog of properties, Carol, already in its pipeline.
Yeah, they're operating within a labor and supply constrained economy inside a competitive real estate market, especially in the construction, renovation, and closing space. This is according to Zillow's chief operating officer. They put that out in a statement. Stock was down 9.5% today. This was a big part of their business story, right? I mean, they just moved into buying homes, fixing them up and selling them. This is a new story for them.
It's, especially when you do it at scale, it's not so easy to get your hands on the workers who you need in order to build those homes or refurbish those homes. Mm-hmm. And of course the materials as well, which is what the company said.
Which is, this speaks to that bigger, broader problem that we're seeing right now in terms of supply chain constraints. We know it. We've all done the stories about you want to redo your kitchen, it's going to cost you twice as much because contractors are in demand and they can't get the supplies to do it.
Well, I mentioned Opendoor. It's a competitor to Zillow, another iBuyer. Shares of Opendoor jumped as much as 7.9% to $25.27 after the company said it was, quote, open for business.
Interesting, right?
Yeah.
How do you square that?
Maybe, it could be a question of scale, could be a question of areas of the country, or maybe perhaps a different approach.
Yeah, exactly. But it is fascinating because Business Week has definitely covered this about Zillow's, not necessarily pivot, walking away from, we've all fallen down that rabbit hole of looking at the value of properties, but this was definitely another extension of the brand and what they do and potentially another revenue stream, but it was a big deal. It was a big deal, and it also was something that people who lived in neighborhoods found that was difficult when they were trying to buy homes because they would those home prices would increase as a result of Zillow. This is Bloomberg Business Week, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A mixed Monday here. The Dow lower, S&P, NASDAQ both advanced. The S&P, NASDAQ closing close to session highs. S&P up 15 today, up 0.3%. NASDAQ up 124 points, up 0.8%. NASDAQ 100 index up by 1% today. Russell 2000 up 0.1%. Dow Transports up 0.6. It was a down day for the Dow, declining 36 points, down 0.1%. Disney leading the way lower. The Walt Disney Company lower today by 3%. S&P, as I mentioned, up 15, up 0.3%. 10-year yield 1.58%. Spot gold down 0.1%, 17.65 the ounce. West Texas Intermediate crude virtually flat, down 1 cent now, 82.27 a barrel. Cannot ignore natural gas plunging 7.8% today, 498 per million BTUs. Briefly, New Jersey's sports betting industry has become the first in the U.S. to take in more than $1 billion worth of bets in a single month in September, as football season sent more gamblers to sports books and, crucially, their phones. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stenovec, live at the Milken Institute Global Conference in Beverly Hills here out on the West Coast. We've got a really great guest to wrap up our first day here. His company, founded in 2018, and they are leveraging software, a software-first approach, if you will, when it comes to how we manufacture things. We're talking about industrial automation. We're so delighted to have with us Bright Machines CEO and co-founder Amar Hansbal. He's with us here at Milken. Welcome to Bloomberg Business Week.
Well, thank you for having me.
So tell us about what you're doing. I'm fascinated because increasingly we know so much in our world has been automated. You're taking it to another level.
Yeah, what we do is we build autonomous assembly lines. So you think of autonomous cars, you can imagine them, kind of driving themselves. So we're doing kind of the same idea, but applying it to building products. So we call ourselves Bright Machines because we're giving eyes and brains to machines and using that intelligence, if you will, to create these what used to be labor-centric assembly lines and replacing them with entirely machine-powered, software-powered ways of assembling products. I mean, if you look at any product, the ones that are surrounding us right now, it's kind of like if you imagine all the piece parts of these products, they're made by machines, but they're assembled by humans.
Right.
And we're changing that so that they're even assembled by humans, assembled by machines. So the entire process is automated.
Omar, what are some examples of processes that you've been able to automate that until you showed up at Bright Machines or created Bright Machines were processes that companies required people for?
I would say assembly in particular. So you think of look at the products surrounding us. So you think of the network infrastructure that's connecting our computers to the internet. You think of the electric vehicles, all the components that go in them. All those pieces, so let's take a piece of network infrastructure. You look at a modern day router. Assembling that router used to be done by hand in a place like China or Mexico. That's the thing that we have replaced using our autonomous assembly line. So robots and other machines are basically putting all the pieces in place and building network boxes, and we're doing that
Amar,
for customers.
I think that's what was kind of surprising, kind of reading in for this, is that I think I had thought so much was already automated. Right. Give us your snapshot of what you see.
I mean, the reality is less than 8% of the assembly lines in the world are automated. And you see all, robots have been around for 40 years.
Right.
But the reality has been that to set up these systems takes so much time and costs so much and requires a level of expertise that only, the big automotive or the big aerospace companies that have lots of money and have 5-year product cycles have been able to automate. You look at any kitchen appliance in your house, that's not automated because it takes too long to configure or costs too much to configure.
So you're saying my bullet that I use to make my shakes?
It's actually a good example.
Really? It's not automated?
It's, like you look at that bullet, pieces of the steel and the plastic are made by machines, but they're all assembled by hand. And that's the kind of thing that when you bring technology like ours to bear, you can, assemble that using a modern method.
If ultimately we reach the point where humans are replaced on automation.
You knew we were going to go there.
We had to go there. Then it creates it's a transformational shift when it comes to the labor market. It's something we talked about earlier with David Hunt and PJ.
Yeah.
Right? You know, this is the type of thing that can actually prevent inflation from getting out of control.
Exactly.
But
yeah.
When does that happen, and what is the massive shift?
So let me give you 3 parts of the answer. First of all, this kind of high level of automation has happened in other industries, and banks are a great example. When ATMs came, it didn't result in like unemployment for all the people that you automated the most repetitive and kind of mind-taxing work. And that's what's happening in manufacturing. If you think about people, and this is it's not meant to be dystopian, but when you go into factories today, there are robots everywhere, but the robots are humans. And you see humans in factories doing the same operation 100,000 times a day. They'll literally insert screws, 4 screws into a box and screw. Like, that is mind-numbing work, right? And so that's the kind of thing that systems like ours replaces. But you're right. When we do that, there is somebody that's affected. But what we've seen our customers do is that they look at automation as an augmentation exercise, that they're increasing the ability of a single person to do multiple, more work, or have them do more valuable work, like do better customer service, do better engineering, do better design. And that's what I think will happen. It'll take, definitely you go through a curve where people need to be retrained. But on the other side of it, it's a much better experience for everybody.
But it's safe to say that there are going to be people who are doing that repetitive work today that we won't need those jobs in the future.
Right. And in fact, I would say one of the things that you see today is there are unfilled manufacturing jobs around the world for that very reason. Some people don't want those jobs. So in the United States, there's 400,000 manufacturing jobs that are open, that are unfilled,
right,
because it's actually hard to find. Either they require a very high level of skill, or the kind of skill they require is so basic that people don't want those
You're
jobs.
hearing in the background all those people who don't want those jobs. No, they're getting ready for another event here. Yeah. No, but it is interesting. So to me, it makes such sense. Like, why wouldn't everybody just automate everything? Right. Why aren't people? Is it expensive?
Yeah, I would say up until now, I think it's been daunting to automate, and it's always been from an expense perspective, from a time perspective, and that when companies like ours shows up and changes the economics of automation, I think people get more ready.
Right.
The other thing that has happened is there has been a perfect storm in the last 2 years between the pandemic, between tariff wars, and then a little bit of security concerns that have really accelerated people's interest in automation.
Hey, Mar, how do you future-proof these assembly lines?
Yeah.
If the customer makes a big purchase,
That's a good point,
and automates it, how do they know 2 years from now it's going to be still good?
So glad you asked that question. Software is the secret sauce, because what we do through software is make our lines programmable. So effectively, since our secret sauce is we use software to configure and run these machines, that software can be used to modify the same line to build a different product.
So we can upgrade the software. Doesn't impact the hardware, the existing hardware, or might?
If you completely change the product, let's say you were building your Bullet and now you're going to build a network router, yes, you need to change the end-of-arm grippers and some of the feeding systems. But if you're upgrading the Bullet or you're doing a second model of that, then you don't need to do that.
So you're going to go public this year?
That is the plan. We announced our transaction, in 17th of May, a SPAC merger, and we are in the process of de-SPACing. We filed our S4 today, and when the SEC gives us the go-ahead, then we shall be a public company.
Come back and talk to us.
Will do.
We would love to continue this conversation. Amar, thank you.
My pleasure. Thanks for having me.
Amar Huntsville, he is Bright Machines CEO and co-founder with us here at Milken. We did it one day down.
One day down, 2 more to go.
2 more to go. I'm going to talk with Kathy Wood. We're going to hear a lot more conversations. They're all coming up. Have a good night, everybody.